Imagine someone told you you could retire on just zero point zero 0.01 Bitcoin. Sounds almost unbelievable, right?
It really does.
Like something out of a futuristic movie. But that bold claim is exactly where we're starting our deep dive today.
It absolutely does sound incredible, and it's sort of meant to. This isn't just about Bitcoin as, an investment whose price goes up. We're actually exploring a pretty profound perspective from Jeff Booth.
Jeff Booth, yeah.
He sees Bitcoin as, well, a foundational shift for a far more stable and, frankly, honest financial system.
Okay, so the core idea here isn't just Bitcoin's price potentially rising. He's proposing a fundamental shift in how we measure wealth and how an economy might naturally function.
Towards deflation, right, where your money actually gains purchasing power over time, not loses it.
Precisely. Which is counterintuitive for most of us today.
Right, and our understanding today comes from looking closely at Booth's recent insights, especially from a really compelling YouTube interview he did.
Yeah, that was a good one. So our mission really is to unpack why Booth makes such a radical claim. We want to help you understand the underlying mechanics of, well, both traditional finance and Bitcoin, and what this could potentially mean for your own financial future. This isn't just about prices going up or down, it's about a complete reevaluation of value itself.
Exactly. And look, to really get Booth's view on Bitcoin, we first have to tackle his perspective on the current financial system, because he argues it's built on, well, incredibly shaky ground.
I hear that phrase a lot, shaky ground, but what does he really mean? He says something interesting, that most people measure their wealth in dollars without realizing that the dollar itself is the moving target.
Yeah, that's a key line.
It's like trying to measure your height with a ruler that's constantly stretching or shrinking. How can you possibly know how tall you are?
It's a great analogy. And what's crucial here is the sheer scale of this instability he points to. Booth highlights that the global financial system right now has approximately $900 trillion in assets.
900 trillion, that's just hard to even picture.
It's astronomical, isn't it? But here's the kicker. Underneath all those assets supporting them is about $600 trillion of debt.
600 trillion in debt.
And that figure includes all the unfunded liabilities, think future pension promises, Social Security payments, things the system has promised but doesn't actually have the dedicated funds for yet.
Okay, so if that debt is so massive, what's the real problem according to Booth? He believes this debt is already insolvent. What does that mean exactly? And what are the implications if he's right?
Well, already insolvent, in his view, means the system can't realistically pay back this debt without just creating even more debt to paper over the cracks.
So it's a cycle.
It's a spiral.
Yeah.
And yet this system pretends the debt is solvent. It carries on as if everything's perfectly healthy.
Yeah.
Now, this pretense is absolutely critical. If that illusion shatters, if people start believing the debt is good, then all those assets you think you own, your house, your investments, everything priced in that currency, they could become essentially worthless almost overnight.
Which would lead to
Complete chaos, as he puts it. Total systemic breakdown.
And governments, central banks, they obviously can't allow that kind of collapse, can they? I mean, that's not good for anyone, especially those in power.
Precisely. They won't allow that kind of direct, chaotic collapse. So instead, they resort to what Booth calls liquidation, which can mean letting asset values fall, forcing sales, and, more importantly, more and more manipulation of money forever.
Forever. That sounds bleak.
Well, it's this necessity to prevent outright collapse that, in his view, inevitably leads to increasing centralization and control. They have to keep propping the system up, which ultimately means they gain more and more power over it, dictating terms, suppressing true market forces.
Okay. And for the average person just trying to live their life, what does all this constant manipulation, this debasement of fiat currencies actually mean for their everyday finances?
It means a quiet, almost invisible, but relentless devaluation of your savings. It's the slow erosion of your purchasing power. It happens so gradually sometimes that maybe people don't even perceive it day to day.
Like inflation just being normal.
Exactly. Every time they print more money or tweak interest rates to keep the system afloat, your hard-earned cash buys a little bit less. It's like having tiny holes drilled in your pocket and your purchasing power is just constantly draining away.
Which brings us finally to Bitcoin. So if our traditional system is this unstable, constantly moving target, where does Booth see stability? He argues Bitcoin is the fixed anchor in this chaotic sea. How does it achieve that?
Right. So Booth defines Bitcoin in a very specific way. He calls it an open, decentralized, secure protocol bounded by energy. Let's break that down a bit.
Please.
Protocol means it's like a set of rules, think like the internet's basic rules, TCP/IP, that everyone agrees on and can check themselves. Bounded by energy refers to proof of work, the immense computing power securing the network, making it incredibly hard and expensive to cheat.
Okay, secure and rule-based.
And crucially, it has a fixed supply cap. Only 21 million Bitcoin will ever exist, period. And its core rules simply can't be rewritten by some committee or government. That's fundamentally different from fiat money, where the rules can and do change all the time.
And he really hammers this point that Bitcoin isn't just another asset within the current system, like a stock or a bond. Why is that distinction so critical for his argument?
It's fundamental. He states quite emphatically that Bitcoin is outside the system. It's not something governments or central banks can just absorb and control easily, not like they might regulate a new tech stock or commodity.
Because it's decentralized.
Because it's decentralized, open, and permissionless. So if, and this is his critical caveat, if it stays decentralized and secure, he predicts it will reprice all $900 trillion of assets. Basically, all the world's value or purchasing power will eventually be measured against Bitcoin.
Reprice all $900 trillion. That sounds, well, huge. What does that actually mean for the purchasing power of, say, one Bitcoin?
Well, let's just run the numbers, Booth suggests, as a thought experiment. If you take that $900 trillion of global purchasing power and you divide it by Bitcoin's fixed supply, let's use 21 million, maybe a bit less, accounting for lost coins.
Okay.
Each Bitcoin would then represent something like $43 million worth of purchasing power in today's terms.
$43 million per Bitcoin. That's a staggering number. It's hard to wrap your head around.
It is. But Booth takes this even further. He suggests that in a truly free market, which he believes Bitcoin enables, prices wouldn't inflate, they'd actually fall over time.
Prices would fall. How does that work? We're so used to inflation.
Right. It's a core concept for him. In a true global free market driven by technology like automation, AI, robotics, and just relentless competitive innovation, things should naturally get cheaper to produce. Efficiency goes up, costs come down.
So goods and services become less expensive.
Exactly. Prices fall forever in real terms. So that $43 million equivalent of purchasing power we calculated, it would actually continue to grow in what it can buy over time. He uses this great analogy like gravity working differently than we thought. Booth argues the natural state of a genuinely free market is deflation. It's something most people alive today have simply never experienced because our current system is explicitly designed for inflation.
Wow. Okay, so because of this deflationary nature, the purchasing power of even a, quote, small percentage of a Bitcoin could eventually be enough to live for forever.
That's the implication, yeah.
Not because Bitcoin itself magically grows against a stable dollar, but because it exists outside a system that's constantly designed to drain your purchasing power, while simultaneously the free market makes things cheaper.
Correct. The real takeaway isn't necessarily that exact $43 million number, but the radical concept itself. In a truly deflationary system enabled by something like Bitcoin, the purchasing power of even a tiny fraction could grow so immensely that it could potentially sustain you indefinitely. It just flips our entire current understanding of wealth and savings completely on its head.
It's less about if this repricing happens, according to Booth, but more about
the timing of when that happens. Yeah. The ultimate value isn't just price, it's being outside that centralized value-destroying system.
Okay, this all sounds incredibly compelling, almost revolutionary. But if Bitcoin really has this kind of power, this potential, why isn't everyone rushing to embrace it? Why aren't we all, on the Bitcoin standard right now?
That's the million-dollar question, isn't it? Or maybe the $43 million question now.
Maybe.
Booth argues the primary threat to Bitcoin's decentralization, the thing holding it back, doesn't actually come from Bitcoin itself, its code or technology. It comes from us.
Us, people.
Yeah. Human nature. Our ingrained tendencies towards greed, fear, the desire for perceived control, for easy answers. He talks about cognitive dissonance, the struggle to accept something that fundamentally challenges our existing beliefs and how we spend our time and energy. That's the biggest obstacle.
So it's our own psychology working against this potential shift. How do governments and existing institutions fit into that picture then?
Well, if these adversaries, governments, central banks, powerful institutions realize they can't actually stop Bitcoin, Booth predicts they'll try to co-opt it instead.
Co-opt it? How?
They might introduce heavy regulations designed to make it difficult to use peer-to-peer or push people towards regulated intermediaries, or they might even launch their own safe, centralized versions of digital currency CBDCs, for example, trying to offer some of the convenience but keeping the control. All designed to sort of lure people back into the controlled, centralized fold.
And it seems like even some Bitcoiners themselves fall into a kind of trap, right? Focusing only on the price.
He points that out, yeah. That price go up mentality, while understandable, can ironically keep people mentally tethered to the old system. They measure success in fiat terms.
Instead of measuring in Bitcoin terms.
Right. And this focus can lead them to make decisions like selling their Bitcoin back into fiat too soon, or maybe moving out of self-custody. That means holding your own private keys securely, rather than trusting an exchange or custodian.
Which makes them reliant on the system again.
Exactly. They inadvertently become part of the very centralizing system they might have thought they were escaping. Booth is really clear on this. These two systems, the centralized fiat world and the decentralized Bitcoin world, are fundamentally incompatible. He believes one of them has to win, which sets up this inevitable clash.
He uses a really vivid analogy for this, doesn't he? The idea that people are trapped in a jail cell screaming at their captor while the jail cell is open. What's he getting at there?
It's a powerful image, isn't it? He means people have this open, decentralized protocol, Bitcoin, available to them right now. They could literally just walk out of the fiat jail cell and into this other system. But fear, uncertainty, maybe just the comfort of the familiar, and that cognitive dissonance we mentioned, the mental discomfort of accepting a radically different reality, it prevents them from seeing or using the open door.
They're kind of stuck in the old way of thinking, even with an escape route right there.
Precisely, even though the escape is permissionless and freely available.
So for Booth, what's our role in this? Especially for those listening who might understand Bitcoin's potential, what can they do?
He really emphasizes the importance of individuals running their own Bitcoin nodes. He calls these node runners the gatekeepers.
Gatekeeper?
Yeah, in the sense that they're the ones who individually validate transactions and enforce the rules of the Bitcoin protocol. By running a node, you're not trusting anyone else. You're verifying the entire history and the rules yourself. It's how individuals collectively protect Bitcoin's sovereignty and decentralization. He sees it as helping humanity move towards what he calls a system of hope, truth, and abundance.
Running a node is like casting a vote for the network's integrity.
In a very real sense, yes, it's active participation in securing the network.
Okay, that makes perfect sense. So stepping back, what does this all mean for our future? How should we think about wealth, about financial freedom, and, our own participation in this really dynamic, evolving landscape?
Well, what's crucial, Booth argues, is recognizing the power of our participation. Every time we choose to spend, save, or invest using the traditional centralized structures, we are, in effect, strengthening that system.
Giving it energy.
Giving it energy, exactly. Conversely, every time we choose things like self-custody for our Bitcoin, engage in peer-to-peer exchange, direct transactions without intermediaries, and generally support decentralized systems, we actively weaken the grip of the old system. It's like a constant vote with our actions, our choices.
So opting into Bitcoin isn't just like a hedge against potential collapse. It's an active choice for something potentially much better.
It really is. In his framework, it's a vote for something better. It's a vote for a shift towards a truly free market, where theoretically the government's role in the economy becomes smaller and smaller because productivity and value creation move more towards the individual and decentralized networks.
That's a huge shift in power dynamics.
It is. And here's something fascinating, and he notes this personal transformation aspect. Booth observes that Bitcoiners who have really gone deep down the rabbit hole, who truly understand these principles, often report that their lives, even their relationships, tend to get better and better and better.
Why do you think that is?
Maybe it's gaining a sense of control, understanding a fundamental truth, aligning actions with principles. It seems to foster a different, perhaps more long-term mindset. It's a profound side effect, he mentions.
That is fascinating. And he even applies this core logic to those who tried to create alternatives to Bitcoin, doesn't he?
Absolutely. He brings up examples like the collapsed exchange, FTX, or even aspects of other crypto projects like Ethereum with Vitalik Buterin. Booth's perspective is pretty straightforward. Those who tried to essentially cheat Bitcoin's core principles maybe build something supposedly better, but that ultimately relied on some form of centralization or trust, they probably would have been better if they just held Bitcoin in the first place.
Because they missed the fundamental point about decentralization and immutable rules.
Precisely. It underlines his core belief, again, that the natural state of the free market is deflation. That constant improvement, getting more for less. It's a concept that's just alien to most people today, living solely within inflationary systems.
So there you have it, a whirlwind tour of Jeff Booth's really profound outlook on Bitcoin. The core argument is pretty clear. The current financial system, built on ever-increasing debt and manipulation, is fundamentally unsustainable.
Right. And Bitcoin, in his view, offers this fixed, decentralized, incorruptible alternative, an anchor.
But the real challenge isn't the technology itself, it's us. It's human nature, our fear, our greed, that cognitive dissonance in accepting a radically different way of organizing value in society.
And overcoming that leads to this vision of a potentially truly free deflationary market, where power shifts away from centralized authorities towards the individual. It's framed as a system offering hope, truth, and abundance if we collectively choose to understand and embrace it.
It definitely leaves you with a lot to think about. In a world where the very definition of money feels like it's being rewritten before our eyes, maybe the question for you, the listener, is, what does true financial freedom look like to you? And are you ready to engage with a system that operates by completely different, perhaps even counterintuitive rules?
That really is the question to ponder, a profound thought to consider.
Absolutely. Well, if you found this deep dive insightful, please do remember to follow, like, and share it with anyone you think might find it interesting.
Yeah, spread the knowledge.
And for more insights into the world of Bitcoin and related ideas, you can follow What Bitcoin Taught Me on Twitter, X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn. Quite a few options there.
Covering all the bases.
We are. Thanks for tuning in, and we'll see you on the next deep dive.